Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the 2-week slide in equities, more strength in the dollar before US data releases, a possible bottom in sterling, as well as gold reaching new lows for the year. Before that though, I'll run down some top corporate results to watch for this week. On Monday, Carnival reports first half results and HSS Hire announce first quarter earnings. On Tuesday, Corporate Right reports full year results while Lennar Corp announces quarterly earnings. General Mills and Rite Aid report quarterly numbers on Wednesday. On Thursday, H&M, Walgreens Boots and Nike report their results. And lastly, Constellation Brands report quarterly earnings on Friday. Now moving on to the economic calendar. On Monday, there's the German IFO. Little of note on Tuesday. On Wednesday, we have US durable goods and the Reserve Bank of New Zealand rate decision. On Thursday, the European Council meeting starts and there's German CPI, US GDP and US CPI. On Friday, we have Japanese CPI, German unemployment, UK GDP, Eurozone CPI and US core PCE inflation. So Jasper, trade wars are causing a rough spot for equities.
Yes, I'd say that's right, Kelly. I mean, we had a decent little recovery in equities for a period. And even while there was some talk of a trade war going on, the feeling was that, well, it's probably just a negotiating tactic from Donald Trump. But it's just been rumbling on for a bit too long. And there are certainly signs of it escalating. Obviously, the latest thing being the $200 billion worth of 10% tariffs on Chinese goods coming into America. Yeah, it's pretty sizable. And it's we've not actually seen the kind of tit-for-tat response from China yet, because actually the size of those, the number of goods involved in those tariffs are more than the total imports from the US to China. So they can't actually match it in tariffs. So obviously it has been taken to a next level. And I think while we're in that kind of period of uncertainty where equities were in a trading range, it's just weighed down sentiment. And we've had quite a rough spot. I think at some point there was a 7, maybe 8-day losing streak in the Dow. That hasn't happened in a year or so. So there are definite signs of weakness out there. Mm-hmm. And particularly so, even though it's the US at the centre of the problems, some of the weakness has been particularly in the European indices, where I think at one point the weakness in the currencies was providing a sort of false floor for them. Mm-hmm. But now the currencies have stabilised a little bit. The indices are really starting to roll over.
Yeah, and the dollar is holding its own.
Well, dollar, interestingly, even though you'd think maybe the US might be hurt from these from the trade war scenario, actually probably any tariffs that are imposed on Chinese goods coming into America is going to mean higher prices. That's higher inflation. That higher inflation has been the kind of missing ingredient for why the Fed haven't been hiking rates more quickly. Mm-hmm. So now they have in fact signalled that they are going to hike rates 4 times this year. And I would say this part of the reason for that slight shift higher in their forecasts is that they're kind of baking in some kind of tariffs and some kind of extra inflation because of that.
Okay, and staying with currencies, you think the pound is due a bounce?
Yeah, I think so. Just based off the idea that there was really 2 things that was driving sterling lower. That was the uncertainty around the Brexit vote, and that Theresa May didn't really seem to have enough of a majority within the Tory party to get through passing her Brexit bill without some sort of amendments forced on by the House of Lords or rebels within her own party. But she did get through it, and as a result, she's still Prime Minister. We don't have the political uncertainty. And also the Bank of England, although I wouldn't say we're out of the woods yet, because there's been all sorts of mixed signals coming from them. Mm-hmm. The latest signal that we had was that actually 3 members of the Monetary Policy Committee voted for rate hikes. So that's obviously a slight improvement on 2, just makes the next rate hike a little bit closer than maybe we previously thought. Perhaps August is on the table, and so hence probably sterling at these oversold levels due a bit of a bounce.
Yeah, okay. And finally, gold, looking quite weak right now. Do you think the weakness is here to stay?
Longer term, I'm still quite bullish on gold, but it's definitely a soft patch right now. It's a downtrend in the medium term, and there was a sort of uptrend that was supporting the gold prices over the past few months. That's been broken to the downside, and it again goes back to this idea that the dollar strength and the effect that tariffs are having. You would think that maybe the uncertainty would help flows to havens, but really those flows seem to have been going more back into government bonds rather than gold. And so it just looks like it's going through a soft patch. I don't think it's down and out, but it definitely looks like it's probably heading for maybe another test of 1250 before maybe some buyers come back in.
Okay, all right. Thank you, Jasper. And thank you all for watching. If you wish to get these videos as soon as they're released, please follow LCG on social media.